Hello, thank you for tuning in. Let's get started with today's show. I am Lisa J. Stocks, and over here on this channel, we talk all things investing and money. So, today I wanted to talk a little bit about how we ended the week, how the stock market ended the week. So, we had Jerome Powell speak on Friday morning, and it really turned things around from Thursday to Friday. But first, let me talk a little bit about this because I am a long term investor. And, one day price movements don't shake me out of my investments, don't get me worried about, the long term, my long term vision on my portfolio. Really, right now, my mindset is around seeing those red days in order to take advantage of it on investments that I know are going to quickly recover, things that I'm still building up in my portfolio. So, yeah, across the board on Thursday, almost all of my investments were down on the day, still significantly up overall because I've been building into them for some time now, but it was a different story on Friday. So, what happened on Friday? Jerome Powell spoke. He is the head of the US Federal Reserve, and he spoke at Jackson Hole, which is an economic symposium. And this is a huge event. Whenever he says anything from any place, it is a huge event. Brokers, bankers, investors, everyone is going to be listening. And his decisions and what he may hint at even really moves the market. So thank you, Rod, Chocolate Drop, everyone that has tuned in so far and is chatting. So if I'm talking about things that you already know, make sure that as your kids are growing up, the young people around you that are starting to work and maybe just getting started with investing, that they know who Jerome Powell is. They know that the different things in the economy that happen that make the stock market dip or thrive, so that they can get into the place where they can build, or if they're just contributing to their 401k, that they know if they look at it and it's down, not to worry as long as they are contributing, invested into the best things possible, that it is worth it, and to continue to let it build. Hey, Anthony, I sent you a message. I didn't know if you were going to be available because I knew you were at a event this week. So, Jerome Powell, the head of the U.S. Federal Reserve, he hinted that the Fed might be cutting rates soon, and that's going to make borrowing costs cheaper. This is a big deal, and we want people to spend money. We want to see our stocks thrive. This will mean that those high yield savings accounts and some of those other things are going to continue to decrease. But this is what goes on. This is how things, this is how the market is going to trend. And right now, he said that what he said has caused the stock market to jump. So on Friday, the NASDAQ, lots of big names thrived, and we're going to talk about some other reasons why Meta and Google and Apple, Intel, all of these companies were up significantly on Friday, some as much as 6% in the one day. So those lower rates that might come around, we'll see what happens in September. This could be a turning point when it comes to our investments and just a shift which we've been feeling for so long with the rates being what they've been. So we'll be watching closely. I was already going to be watching closely because September overall, I am definitely in the building phase with my retirement, early retirement, all of my accounts as a whole. So I'm always looking for an opportunity to get my stocks low, not to buy low and sell anytime soon, but to build as much as possible while they're low and hold until, until I'm ready to be out of the game. Potentially, of course, those retirement accounts after 59 and a half, 67, 70, and that time of life. So thank you very much, Vincent, for that first super chat. I appreciate you. And let's start talking about Meta and Google first up. This StreamYard has changed up. So sorry I haven't been coming on as regular in my time slot, but I'm going to try to keep to it, even if I am doing another live later in the day. And Vincent.
Thank you so much. We do greatly appreciate it.
Okay, so now back to what we were talking about. Meta and Google's partnership. They have signed a $10 billion 6-year deal where Google will be powering Meta's AI projects. So these are two supposedly competitors, but they're willing to partner up for the bigger picture, to make money, to take advantage of these AI projects that they would not be as successful trying to do on their own. So Meta will use Google servers and storage and special chips in order to run their models, such as Llama. So for Google, this deal boosts its cloud business, which has grown over 30% in the last year. Now, these are both investments that I have added to my portfolio outside of my ETFs directly. Pretty much all of the Mag 7 I invest into, some at smaller positions, only 2 shares so far, but Meta and Google are 2 that I am still building into. So the stock market news had the stocks moving up. Let's see. Google was up 3% on Friday, and Meta was up about 2%, and both have continued to move up in the after hours slightly. So we will see where they open at tomorrow. So this could mean both stocks. For me, already the choice has been made that these are stocks that I've decided to hold for the long term. AI is an element that's touching pretty much all of the top stocks, and it's you see it implemented into everything that we are touching nowadays. So it's not going to stop anytime soon. So I know I don't think a day passes anymore where I'm not using some AI tool, whether I like it or not. If I even trying to open a ticket with a company or interact with anything, you might wind up dealing with an AI bot. All right, so in some other news that we saw recently, Intel and the US government. So let's take a look at Intel stock. Now that one was up 5.53% on Friday. So what happened with Intel is the US government has agreed to take a 10% ownership stake in Intel. And in addition to that, they got $2 billion from Softbank. So that's huge backing for this company that we don't hear about as much as, the NVIDIAs and AMDs and Taiwan Semi. But the government wants more computer chips made in the US, and Intel is a key player that I guess is willing to get on board with that goal. So this has made the stock shoot up, let's see, over the last month. Over the last month, up about 10%. So Intel, some people are worried that this government ownership might be an unfair competitive advantage, but we will see in time how this turns out. But for right now, Intel's backing that they are getting from other sources, like I said, with Softbank as well as the government, has the stock rising. So just different things that occur in order to that shape and impact the stock market as a whole. So let me go back to the comments. Oh my goodness. Thank you, Joe, for being a member and for dropping that super chat. I appreciate that support. Chocolate drop. David, thank you everyone that has tuned in so far. I will just run through my topic and definitely open up the floor to Q&A. So, in addition to Intel, Tesla. Do I have Tesla's chart up here? Yes, I do. Let's see how Tesla was doing. Tesla currently $340. Is this correct? Let me refresh. Okay, so Tesla was up 6.22% on Friday. And what's going on with them? Tesla. So after Powell spoke on Friday morning, Tesla stock jumped and they've been having wild swings. Tesla is out of those blue chip stocks that I've added to my portfolio. Tesla has been the one that does not, it's unlike the others. The price movements, the behavior of Elon and everything that goes on with it. But Jerome Powell lowering the rates, potentially coming very soon, is going to help companies like Tesla that need money right now. So Tesla is launching their Robotaxi service in Austin, Texas, and they are trying to expand into the Arizona area. And so Elon has been teasing and saying that, he has this fully self-driving technology, and the stock price it goes up and down. It had been down 29% from its peak, and some people take that as a bargain because they believe in time that the company will get it together and then be back on track to where they were. I know a few months ago, I was up over 100% on my Tesla position. It has pulled back. I did not take profits. I'm just holding and probably not going to be one that I'm focusing on building right now, but definitely not ready to cut it from my portfolio anytime soon. But yeah, Tesla is always a roller coaster. So if you have to be ready for that, if it's an individual company that you add to your portfolio. Okay, so now let's touch on what was going on with Apple. Another big name that, of course, is going to impact the stock market as a whole. So Apple, was up only 1.27% on Friday. But their news that we were seeing last week is that, and I guess this is still speculation, but they're in talks with Google about using Google's Gemini AI to upgrade Siri, its voice assistant. And this could be happening in the next year or so. So, guys, let me know in the chat. Do you guys feel that Siri definitely needs an upgrade? I do. Now that I have Copilot and other things, I don't ask Siri anything. Siri was always giving me the runarounds anyways, basically giving me articles and sending me here and there. But these other things, Copilot, Grok, Gemini, when you ask them a question, they give you a direct answer, instead of kind of saying, well, here's this, that, and the other, you go figure it out. So these tech companies teaming up related to AI is going to make their stock even stronger. And so, like I said, Apple, of course, is in that Mag 7, so it's one that I am currently invested into. One of my first positions that I have ever invested into. And at one point, my portfolio was very disproportionately heavily weighted into Apple stock, but I worked to get that shifted over the last couple of years. Once I discovered ETFs and diversification and having a balanced portfolio. So, guys, as always, not financial advice. I'm just here sharing my journey into investing, making sure that I am staying informed and doing the best for myself and my family to make our money grow. Hey, SBK, thank you for tuning in. So yeah, those are some of the hot topics that I wanted to touch on for today. So I'm going to take a minute and go to the chat for a little bit, and then I'm going to talk about back to school and inflation and some other things. Okay, let's see. Vincent. I was approved for the Fidelity Visa credit card. Cashback will be deposited into one of my Fidelity accounts. You know, Vincent, it's funny. I was just watching Key's video a couple of days ago. What is Key's channel proper name? I can't think. Well, anyways, I was commenting on Key's video that, yeah, I think that one caught my attention. She was reviewing 5 cards. I don't open credit cards very often, but that's one that I was thinking about for the same reason of just having my card and just having my cash back automatically deposited. I do have a cash back rewards card, but it's with Bank of America. So when I go in every once in a while, I think right now I have about $100. So I'm at a point where I'm going to be pulling my cash out, but it goes to my checking account. And then from there, you're kind of, by getting that Fidelity card, it'll kind of take out those steps of me having to go to the card, cash it out, which will send it over to my checking account. And then from there, moving it to Fidelity or another brokerage in order to invest. So something I was thinking about, but I haven't decided. I was thinking about it just this weekend, but I think I might do it too. Oh, what was Joe sharing about? Oh, you're not hearing you didn't get the audio. Let's see. Okay, let me see. I'm trying to take a look at these questions. I don't know what was going on with this conversation with Joe, but let me move forward. About that wallet, NGD stock. Let's take a look at that. What is that? Okay, year to date, it's up 123%. New Gold Inc. Okay, so you've been holding it for a while. If you're up 462%, thanks for sharing that one, guys. If you want to take a look, I'm not familiar. It is currently $5.54 a share. And it is a Canadian mining company. Curtis, Tesla is on fire, waiting for fully self-driving in all major cities, New York, Miami, San Francisco. I've never, well, I've been in a Tesla where the person behind the wheel was using, the assisted driving, but I've never been like in a Waymo or anything like that. Have you, Curtis, where it was just truly self-driving? I haven't been in a big city that had that available. Yes, Siri needs an upgrade, especially in light of, I'm making the phones are lighting up. The phones hear me saying the word, especially in light of Apple losing more AI to Meta. Yes, Siri definitely needed an upgrade. Would you do options or just keep the shares? When it comes to what, Anthony? I don't listen. Whether it's a call or a put, a call meaning the stock price is anticipated to go up, a put meaning it's anticipated to go down. Just because I am an investor into Apple or Meta or Google does not mean I will not do options in addition to that, even if it is to the downside. I'm still going to hold my shares, do my put option, and make money. But yeah, just saying that it doesn't, I'm not opposed to doing a put option on an investment that I'm holding long term. I'm holding it long term and I'm willing to hold on to it because I believe in its long term potential and that it'll turn around. So what's in the cup? It's just tea. It's just tea, Anthony. Not what is that? Not Long Island iced tea, just regular tea. Apple is thriving with respect to their entertainment and streaming. They are. I don't know where they rank exactly, but Netflix, they really did their thing with the just globally with the password sharing and all the things that they've accomplished. Definitely one as opposed to Disney and some of these other platforms that just cannot keep up in that department. SBK, thank you for the super chat. If I didn't say that already, thank you guys. That's number 3 towards my goal of the day.
Thank you so much. We do greatly appreciate it.
Okay, back to the comments. Let's see. Oh, Rod is saying that he has that Fidelity card. Okay. Yeah, I'm not gonna. I have to get the details on it. I'm sure. Kiki Adventures. That's what I was trying to remember. I know it's Key, but I just was going blank there. I just wanted to say the whole thing. Thank you, Rod. Okay, so yeah, Anthony said, he's been holding for a while, but even, even for us to not even be 1 year in 123% up, there are some investments that you have to hold for 5 years to get to that S&P 500, for example. You'd probably be holding for 5 years, depending on which 5-year time range in order to get to around over 100%. I could go for a Long Island iced tea too, but not yet. It's a little too early in the day. So after I finish up here, I have a little bit of paperwork to do, and then I'm going to take my daughter driving. She's already asked what she wants to practice. She wants to practice parking, parallel parking and backing up. So that is what's on the agenda. She had broken her glasses, and we ordered a replacement from just one of those Zulu or something, one of these online places, just to hold her until we get to her appointment, which I think is actually like in a few days is her eye doctor appointment. So, but yeah, those glasses cost like $20. So we are good to get behind the wheel because we have to make sure we have our permits and our glasses on and all that good stuff. Uh, all right, so I think I've gone through the comments and questions. Feel free to drop any others. I will take another break in order to take a look at that again. So now, oh, Joe. Joe's in the same boat with me with her son with the driving practice. So she said we practiced this morning, and my nerves are calming down. Okay. Yeah. Oh, it's rough. It's rough, but I got to do it. She's gone to driving school, but yeah, you obviously have to do a lot more hours with them. But yeah, back to stock talk. So, inflation and tariffs and everything is impacting back to school. So my daughter that has not started school yet. She's gonna be starting school back this week, and retail sales are another area that is going to feel the impact because most people probably were not on the ball. I know I wasn't with getting the school shopping done earlier, maybe early July or so, in order to avoid any impact that was going to be trickling down into the prices of everything that we need based on the tariffs. I was actually in one store a couple of days ago, last weekend, and it had a sign up saying that, our prices have increased due to tariffs. It was a men's, a store that probably has a lot of, well, I guess all the stores have a lot of imported stuff. But anyways, so rising inflation, the tariffs on Chinese imports are driving up prices on everything, backpacks, laptops, and this is either going to force families to have to cut back, delay their purchases, and retailers like Target, Walmart, Amazon are bracing for this. And we will see in time or in the short term how the sales affect the stocks, how cost conscious everyone has to remain in order to, stay within budget. And it's just a tough time right now. So especially for lower income households, just everything, there's just no place where prices are not increasing on things that are just those regular everyday necessities, groceries, back to school clothes. Especially when the kids are little, they're always outgrowing their clothes and their shoes and everything else. And the backpacks, you're not using backpacks and certain things year to year. They're going to need replacements. And these tariffs on Chinese goods are just adding fuel to the fire, increasing the costs. Nowadays electronics is a big element to it. So my daughter, her school gives her a loaner laptop, but it's all there's always going to be costs that we're going to be hit with. I won't even get into the car insurance situation because it's insane. But yeah, like I said, those big retailers, Target, Walmart, Amazon, could be impacted by the increase and just consumers not having it in order to spend the way that they want, as well as, retailers that are where we would be going for all the uniforms and clothings and things like that. So it's not it's just a stress test right now with inflation and these trade policies and everything that's going back and forth. So we'll be watching any retail related earnings. I know Target just had their earnings recently, I believe. I think it passed already. My Target stock. Oh, I should have done a little breakdown on Target because I see that I believe I saw that their CEO is stepping down. Target stock has been just doing horribly. I have not cut it from my portfolio yet. I do not want to have to sell it at a loss. It's a small position, but yeah, over the last let's see, year to date. Year to date, Target stock is down 26.59%. So Target and Disney, if you haven't been here before, or if you haven't been following me for long, those are the two pain points in my portfolio that I often reference. Okay, so let me see. Okay, so yeah, Rod is saying yes, he quit the Target. Let's see, news related to Target. Let's see. Yes, Target stock tumbles. Why? A CEO change is overshadowing an earnings beat. So they actually beat when it came to earnings, but the drama that has been lingering for some time now, their CEO will transition out of the role, and this caused the stock to drop 10% in the pre-market. And when was this article from? Let's see. 4 days ago. So I'm guessing Target's earnings were probably on like Thursday. But yeah, their revenue has been declining. There's always, there was so much drama related to some different products that they had a while back. The DEI theft of products, they claim that, it's just been one thing after another when it comes to Target. And yeah, their stock has really pulled back significantly. But it's funny. I guess there's certain positions that I was building into, and I kind of stopped at a pretty low share size. I think I might have about 10 when it comes to Target. And when I look at my portfolio, it shows me that I lost confidence in it, but I lost confidence and decided to focus on building other positions more, and decided to just hold on and let those turn around. And like I said, Target and Disney are two that I expected to turn around more quickly, and they have not. All right, let me take a quick look at the chat. Yes, I see a few of you guys are saying that you saw this Target news. I guess I had my minds on those good partnerships, those Google and Apple and Meta that are doing much better right now. But Amazon is another one that I hold that are those big names that I'm always ready for them to be able to recover no matter what we're going through. So now I asked ChatGPT to give me a few questions as to top questions related to investing and finance that have been asked over the last week. And I'm just going to go over a few of those questions. Guys, feel free. We're kind of in the Q&A stage now, so feel free to drop any questions, comments that you have. And like I said, if I'm talking about things that, make sure that you're bringing your family, the kids, the teenagers, everyone around you on this journey with you, and making sure that they know who Jerome Powell is, that they know the different things that impact the stock market, and not to be afraid of investing. Hey, Keaton Grace is in the chat. Thank you so much for stopping by. So let's go through a few of those questions. I don't even, yeah. I'm not fancy. I'm not fancy like KG with hitting the buttons and having the reaction so quickly. But let's continue with what I had going on here. Vincent, I'm not gonna. Sometimes I go live over in Keenan's Discord, but I will not be going live tonight. But those lives are not public. Those are going to be limited to the Discord members. Okay, so the first question that I got was, how do I start investing with little money? Now, if you've been here before, you know what I'm going to say about this. Fractional shares. And this has been something that I love is available nowadays. I love that there's, there's no fees, there's no stress, there's no investing is accessible to everyone. And as little as $1 at Fidelity, $5 on other platforms like Moomoo and Webull and Public, for example. So anyone can get started investing. You don't have to wait until you have some large sum of money. There are some investments that are, like Target, one that I won't be buying, but Target is $99, while Costco is $958. But whatever you want to have in your portfolio, the price point, if it's $500 like a Microsoft, nearly $1,000 like Costco, that does not have to hold you back from being able to add those things to your portfolio, because you can do it on a daily basis, weekly basis, on small amounts. So when it comes to that question of how do I get started with a little bit of money, pick an ETF, pick some blue chip stocks, create a balanced portfolio, and then get started with how you are going to invest on a regular basis in order to build up your positions. I have over 30 shares of VTI, and I've never invested more than $10 at a time towards building that portfolio. And the current price of VTI is $318. So that's been going on for years. It doesn't happen overnight. But it's about staying consistent and realizing that you do not have to be held back from investing because of the amount of money that you have. And don't focus on how many shares do I have and things like that. Think about what percentage gain that you have been able to accomplish by having your money invested, instead of just having it sitting at the local bank, or eating out all the time, or whatever those vices are that are eating up your money. By having it invested, you're making it grow. And always want to give this reminder, I always prioritize my retirement account first and make sure that that's on track, especially if you're getting off to a later start in life with your investing. And then from there, if you have the budget for it, then I would move on to incorporating an early retirement account, or if you just want to, it doesn't necessarily have to be a retirement account, a taxable account, an account that you can tap into whenever you are ready, or investment accounts for your children. But prioritize that retirement first, so that you know for sure, like I always say, that you're able to take care of your older self. So let's take a look at a resilient dad's question here. Agreed, I'm getting my nieces and nephews into trading with a limit. They made enough to buy their own school clothes and decide not to keep reinvesting. These are keys of practice. So I hope they're getting the balance of trading and investing and prioritizing the investing. But I'm glad that they have knowledge of how to make their money grow in order to do something like that. Curtis, what do you mean by this $200 a month plan? I invest every 2 weeks into VOO. Okay. Yes, we just completed a challenge, 10-week challenge over in the Discord, and many people accomplished 1 share of VOO in that challenge by investing $10 daily based on VOO's current share price. And let's see. Okay, so yes, I hope everyone gets the concept of fractional shares. You can buy just a slice, just a little bit, even if it's, 0.01% of a share, and then you just keep building and building and building. But yeah, something I'm glad that I embraced because I didn't have to be held back from incorporating quality investments in my portfolio because of the price. It was going to take me a long time to save up, $1,200 for a share of Tesla. This is when I first started investing. Google, Amazon, many of the investments, when I started investing into them, they had not recently had a stock split and the share prices were very high. But I started with my whatever amount, $10, $20 on a regular basis. And then when the shares split, I just had more shares. With the market being so shaky, is it a good time to delve into the stock market right now? I said what I said. I think that we should always be investing, in my opinion. Now, as far as the stock market being shaky, earlier in the show, I was saying that September historically is the worst performing month of when it comes to when we look back and reflect on, over 90 years of the S&P 500, for example. September almost always has a negative return. And what I'm looking at that as is an opportunity to continue building more heavily in my investments, because we have to always remember that concept of we want to buy low and sell high. And I am a long-term investor. So when I say buy low, sell high, I'm not talking about in a few months. I'm not talking about in 1 year. Obviously, when it comes to retirement, I'm talking about whatever age you are today, keep on buying consistently. If you can add additional to your investment accounts when we are going through a lot of turmoil in the stock market, like we were back in April with Liberation Day and Trump and these tariffs and everything that were going on. I see those times as opportunities. It's just about making sure that you are putting that attention and focus into the right investments. Not anything speculative, not any, no hype stocks. I am personally focusing on ETFs, those blue chip stocks that have a long history that we can reflect upon and most likely are not going to be changing anything about the fundamentals of what they are providing. And we can know that they will continue on the path that they are. Do your research. If you don't even want to take on that level of responsibility of individual stocks, you can invest into, just like someone already mentioned today, VOO. That's an investment that gives you exposure to the total S&P 500, the 500 top companies in the US. or something like a VTI, which is the total stock market. Both of those low fees associated with it. There is going to be a fee for investing into a fund, but those both have a 0.03% fee. So when you say the stock market is shaky, I don't want us to be fearful of the stock market at any stage, whether it's thriving, whether it's pulling back. Just be able to be confident, put the work in ahead of time so that you can be confident in just holding long term and letting your investments build. I was just watching someone's video. I'm going to go back to the comments in a second, but I was just watching someone's video, and they were talking about they pretty much lost $10,000 in the stock market because they sold a lot of their investments back in 2022. Let's look at the S&P right here. So yeah, overall, we had 2023 and 2024, we had about a 25% increase when it comes to the S&P 500. But 2020, the year prior, there was, a drastic dip when it comes to the economy. And we even just looking at a 5-year time frame, you have to realize what impacts the stock market the last 5-6 years. Let's say we've been through C-19, we've been through this new administration, these tariffs, we've been through threats of war and so many different things. And if you look at your stocks, if you look at the economy and the stock market on a daily or weekly basis, you're going to be aware of all of the ups and downs. But when it comes to the total US economy, we can see that it always recovers. So we should not be shaken out of good positions, because of what's going on in the short term today. We should not allow that to impact our long-term vision for our portfolio. We should just stay focused and be able to hold on. And okay, so this person's video that I was watching here on YouTube that said they lost $10,000 when I'm not sure how long they had been holding when we were at those lows in around the late 2022, I'm thinking, or summer 2022 kind of time, maybe like summer to October range. But she was selling her investments, and when she started to say what she was selling, it was like MO, VTI. I'm just like, what in the world? Why? But these are the times when I wish that she had zoomed out and just been patient and just, thought about her age and her goals and the long term and held on during those times, maybe even invested more, continued to invest at those times, because she would be reaping the rewards now. So I say all that to say, the market being shaky, it's a matter of how you interpret it. So let me go back to the chat for a little bit. So Curtis is saying, my portfolio went from 70K in November. It dipped, I held, and this week it passed 70 again. So guys, I share certain positions with you here. I like my FXAIX. I was down $15,000 in, I think, late April, from where I was in January to where I was after Liberation Day. I was down about $15,000 to $20,000, and now from where I was in January, I'm up about $16,000 from where I was. So it's the S&P 500. It's a retirement account. It's for the long term. I know what I have in that portfolio. I have Nvidia. I have quality investments that I'm ready to hold for the long term. So I didn't let that bother me at all. It's disappointing seeing it, but I know whether if even if it did take longer than it did for things to turn around. I mean, I don't want to say this extreme, but even if it took this current administration that's in place, even if it took the whole 4 years for things to go in a different direction, it is what it is. And I'm going to continue to invest, and I'm going to be ready for uh, to take advantage of what may go on when we have a new administration in office. I take that into account when I make my decisions related to how I'm going to invest. And I think that some of us saw that everything that was going on with the tariffs and everything, that this is really shaking the market and bringing down our investments drastically. But if we believed in them, if we understood the potential, and when things get sorted out related to these tariffs, which a lot of it is starting to, but just thinking about the big picture and just thinking about that we're not going to be under this particular administration forever. Okay, so 2023 and 2024, best time to buy the dips. Okay, I said what I said. Great info, because I wanted to get back into the stock market, but I am skeptical. Well, I'm glad that you were able to. I know sometimes I feel like I'm just rambling, but I'm glad that you're getting the message, and just give it some time. I don't know how old you are. Just like when people make comments and I read their comments, it's like if I feel like as soon as I read certain people's comments, I have 10 questions that pop into my mind that I wish I knew before I answer them. But I just try to give a kind of a generic answer. But you always have to, for yourself, take into account your age, your risk tolerance, your budget. Do you have debt? Get rid of that debt, guys, because make sure you have an emergency fund, all these different steps, because you don't want to run into anything. And I hate when I hear people saying that they sold their investments because they needed the money when it wasn't the time that they intended on tapping into that particular investment. Whether it's something related to pulling money out of your 401k, taking penalties to do repairs, buy a car, all these different things. We have to make sure that we're having cash on hand in order to deal with those things. Having credit available to us, of course, that's just a part of life. But when I use my credit cards, I have to have cash. I have to have money in order to pay them. And sometimes, depending on the cost of what issue I run into, sometimes I have to pull heavily from those savings. And then I'm in that stage where I'm going to be replenishing my savings account for a while. But I want to do that so that next time something comes up, the car repairs, the tires, the roof is leaking, whatever it is, that I can deal with it and not put myself into debt and have to be carrying any 30%, 30% interest on that money. Okay, so you're already retired. Okay. So yeah, you have to take that into account on what stage of life you are, and um, how, like I said, your risk tolerance and how you can go forward with continuing to make your money grow. So agree, the credit card debt compound interest 15% greater than stock growth of 8%. Yes. And when I was still carrying some credit card debt, I was still contributing to my 401k at work, but as quickly as possible, just prioritize focusing on getting rid of any any of that type of consumer debt, car payment, and things like that. And then work to have savings on hand so that we can not have to have huge car payments, huge amounts lingering when something comes up. Okay, so Curtis is sharing, I'm in NVIDIA, Meta, Tesla, and Palantir. Now, Palantir is an investment that I do not hold. I did not invest into directly. I invest into my ETF, so I have exposure. I always say, I feel like I have exposure to everything, but that is one that I actually searched through my photos one day for Palantir. I was searching for the word. And a long time ago, I traded some Palantir. I didn't even remember that I did that, but I've never held it for an investment. Yes, dollar cost averaging. I love it. Yes, we definitely have to zoom out and take our time when it comes to our investments. There's no way I would not. There's certain investments I'm not selling. I'm just not selling. I don't know unless they do something really strange. I'm not going to be selling them. Okay. So guys, I haven't even said this all day. If you are new here and you have not given the live a thumbs up, please take a second to do that. Subscribe, hit that notification bell, check out my referral links. I do have referrals for some of the platforms that I use on a regular basis, like Moomoo and Weeble, and as well as I have an affiliate link for Keen & Grace's Discord. So check those out. And thank you for tuning in and supporting the channel. So let's go on to the second question. And I guess I already answered this question based on a question that I had in the chat. And it is now a good time to buy stocks? So rate cuts, tech stocks doing what they do. Is it risky? September can be shaky. This is actually in my notes that when I asked ChatGPT for what people are worried about when it comes to the stock market. And yeah, I just was going on about this, but look at the trends, just like we just been saying, look at the trends. I'm seeing this right now as an opportunity, the dip. I'm not rushing in. I never really do. I'm gonna be consistently investing. I have my alerts set in order to make sure that I'm keeping up with things when they do pull back by a certain percentage under the 200 EMA, different things that I want to make sure that I don't miss out on in case I'm, busy living life out here. But that is my plan right now. To me, there's never, you have to think about it. I think this is another thing when you see so many headlines talking about all-time highs, another thing is that people might worry like it's too late for me. But you have to think about the big picture. How many times have these investments had all-time highs? You have to zoom out and see, over the last 5 years, has it continued to go up and up and up? Over the next 5 years, is it going to continue to do the same? So just because something is at an all-time high today doesn't mean that there's not going to be an all-time high in the next few months or next few weeks. So we just have to know we all have a different starting point when we're going to get started in investing. We just have to work from there and not be worried about not be consumed by that, because we can't go back in time. I can't go back to the 80s and buy my Apple stock. It is what it is. But I'm just gonna keep moving forward and uh, just make sure that I prioritize this, because this is one of the biggest ways that I am trying to set myself up for the future, so that I'm not dependent on corporate America. I'm not having to work uh, too much longer. And, I also incorporated real estate, rental properties, but I wish I had done more of those type of things. I wish I had this mindset when I was younger, and now I could be in a better place. So I definitely want us to try to instill this in the people around us at an early age, that they should invest, they should create businesses, do what they can in order to be self-sufficient. And if that's what they desire to do, but even if they are working for someone else in corporate America, still make investing a high priority, so that you are taking advantage of that power of compound growth. And, the earlier you start, those small amounts, it's going to be a smaller amount on a regular, consistent basis. The younger you start, as you get older and older, you're going to have to contribute larger amounts of money. If you have goals of, $1 million, 1.2, 3, 4, if that's what your goal is that you want to have in retirement. And those amounts might sound high, but we have to be realistic in making our plans for retirement, because we've seen lately with everything that's been going on with changes that this administration is making, as far as um, uh, Medicare and things like that. So we can't think that there's going to be different types of aid and ways for us to survive when we're older. We have to be ready to take care of ourselves. There's no more pension. They created a system where they want us to do this ourselves, and who knows what's going to go on with Social Security. And so I think we should just think about the big picture when we're living our lives, and making sure that we're finding somewhere to fit in some of these things in order to make sure that we're on track for the future. Start young. Compounding is great, most definitely. Okay, so let me see. All right, so now one other question that I had here, and I asked ChatGPT to give me a few questions from the last week that were highly trending as far as investing in the stock market. And this is another one. What stocks should a beginner buy? And we've touched on these already today too. I think a start that I don't feel that anyone should have to wait on would be an S&P 500 or total US stock market investment. I think that, just make sure I just recently did a video about some choices related to, because every broker, different brokers, there's several different choices that give you exposure to the same index. So whether it's SPLG, VOO, if you're at Fidelity, FXAIX, IVV, I believe, there's different investments that give you exposure to the S&P 500. Just a matter of finding the right one, understanding the expenses, understanding what account that you're going to have it into, and making the best choice that fits into your goals. But for a new beginner, I think that those are both places that I would say, don't wait. You can get started with that. Then in time, if you want to take your time, build your knowledge, get an understanding of individual stocks that you want to incorporate, say, dividend paying ETFs or investments like a business development company, different things like that. Now, those things, I think you should take your time, do your research, have a better understanding. But a low expense, um, diversified ETF, I think you can get started with that and be consistent with that while you're doing research. And you don't even have to get into doing individual stocks and all these other things. That could be your start and your finish, but don't let that hold you back. Don't be intimidated by investing. So we were talking about Tesla earlier. So yeah, you don't have to choose a Tesla that's going to be volatile and be, uh, you know, hard for a new investor to stomach. Now, you can run into those issues even when it comes to the S&P 500 or total US stock market, but I hope that if you are a new investor, you at least have uh someone around you to give you the guidance on what zoom out means if you don't know what it means, and make sure that you're giving your investments a chance to grow and understanding your goals. And I think that there's a lot of, I try to be clear when I talk, because I do trade, I do options trade, I will trade regular shares, but overall I am a long-term investor. And I think that there's a lot of confusion as to being an investor and being a trader. And I am both, much more investor than trader. But for those that are getting started and don't even really know the difference, I think that that's something that you need to get your head around and prioritize investing first, or when you do your trades, taking a portion of your winnings. Hopefully you are a successful trader, taking a portion of those winnings from trading and keeping some of that into moving some of that over into the long-term investing, so that you're building for the future. So, Mr. Dividend Investor, thank you for stopping by. Okay, so those were my few questions that I had pulled. And let's see. Oh, it's there. StreamYard was giving me such a hard time, but now it seems to be working pretty good. All right, so guys, make sure you give the live a thumbs up if you have not already. Thank you guys for tuning in. Let me know if you have any questions. Feel free to drop them in the chat. And if you're new here and you are enjoying this conversation, subscribe. So I'm just going to be on for a few more minutes. I don't see any more questions rolling in. If you have any questions, please share them. And any questions, comments, anything that you want covered in future live streams, and I will make a note of it. But I'm gonna probably go take my daughter driving first and then come back and cook. Money lady, I always feel motivated after listening to you talk about investing. Thank you. Yes, I hope chocolate job. Do your kids understand investing? Do they know any investments that they want to hold for the long term? Do they understand any of these concepts that I'm talking about? I want them to. I was talking to someone recently, and their daughter has to be maybe 7, and she knows a couple of ticker symbols, and she knows it's an investment. She knows, dad is doing this in order to make money. At least she has a little bit of a concept at that young age. And I I want us to teach the children and bring them along on this journey at the different stages that they are, some of our kids, like mine and Joe, we have teenagers now, so they can understand a whole lot more. But even the little ones, we have to just let them understand what they're seeing. It's not we just go to the store and swipe the card and just like as though we just get the stuff and there's no money behind it. I want her to understand interest rates and choosing the right card and points and rewards and all of that. So I'm still, we're still working on some of these different concepts, but I definitely want her to always be making sure that her money is in a place where it's making more money and that she's not creating a budget for herself, overextending herself with creating a lifestyle where all of the money is going to the car payment and getting your hair done and your nails done and all car insurance and food, eating out and all this stuff. And then there's nothing left for saving and investing. I don't want her to create that for herself. I want her to always have the things that we've been talking about here today, the things we're always talking about over here, that emergency fund, investments, growing, contributing on a regular basis, especially the younger you are, in order to have your account for, I think that she'll be on track to not just have a retirement account for her true retirement age. If what I've been sharing with her is impacting her at all, I think she'll be like me and pretty quickly want to do both. I'm hoping so. Because having your money sitting at even her high yield savings account, our high yield savings accounts is coming down. It's coming down. But the potential of making the right investment and understanding even if she does trade, understanding how to navigate a trade properly. Look at what Anthony shared of an investment that's up over 120% in 2025. Having an understanding of how to put your money into something like that, using a stop loss, understanding, the implications of potentially if she did not hold it for a whole year, things like that in order to build wealth is what I want her to know. And there's some elements that I did not know on day one, and I'm glad that I know them now, and I'm a different person now. And some of the mistakes that I make, any mistake that I made, whether it's related to investing or anything else, anyone who will listen to me that will hear my story, I'm willing to share so that I made the mistake already. So hopefully you take something from what I'm saying to you and you don't have to make the same mistakes too. And using a stop loss, understanding what is an investment and what is a trade. These are certain elements that I learned in time and have helped me and have allowed me to be a better trader and investor. And so, realizing that, like I was talking about, all-time highs, don't let that turn you off. If you think, or if you want to go out there and try to find the next NVIDIA, the next Amazon, you can do that. But while you're doing that, make sure that you're limiting your risk and setting yourself up as much as possible for success. If not, don't feel like the run is done and is it the end of the road for Amazon? I know Amazon is I don't think I could ever go a day without seeing an Amazon truck coming down my street. So think about the big picture and you decide what's right for you. I don't have to I'm in a place that I don't feel like I have to chase penny stocks and IPOs and all of those things all of the time. If I decide to do that, it's going to be a smaller allocation, because those are going to be things that need a high level of babysitting, responsibility, time, effort in order for me to research, watch, adjust my stop loss and things like that. So I can just, invest into my ETFs, Amazon, Google, Meta, and I can sleep well at night and not have any stress. If I didn't, if something happens and I'm, caught up with something for a week or two. But even if I'm not, and I do get into something more speculative, a stop loss is something that you can set in your account, into your brokerage, in order to sell your investment for you automatically if it drops below a certain percentage or down to a certain dollar amount. So these are things that can help you. And these are things on the other ends, as I'm always saying, that can help you to catch those dips if you are in the building stage, in order to purchase and add to your portfolio. So I use it in both ways, but overall, I don't trade in that way very often. A lot of my options trades, I'm not holding overnight, so I don't have that concern there. But even if I am just holding it for a half an hour, 10 minutes, whatever it is, I'm still, as soon as that order is filled, I'm putting on my stop loss just in case. I have to make sure to limit my risk. I know my goals. I know my tolerance. I'm not in this to lose money, so I have to do what's right for me. So, okay. I'm really going to wrap up now. Thank you guys for tuning in. Make sure to give the live a thumbs up. Let me know if you have any questions. Members, I did put on my community tab. If any member would like to have a one-on-one conversation or, video chat, let me know. If there's anything that I can help with, I am here to support. And, I'm not a financial advisor, but I definitely want to help troubleshoot and help with anything. If you have any video requests, let me know. And thank you guys for tuning in. I will see you guys next week.
And to investments, she made a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you want to make some money, visit Lisa J Stocks.